Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closure Show. As always, Scott Carson, excited to be with you here today. And today's episode is all about making infinite returns. Infinite returns? How do you make infinite returns, especially with performing or non-performing notes? Well, this episode is actually, we're going to dive into a case study. It's actual deal that we went through this past weekend in our virtual note buying workshop. It's an actual deal. We've got a bid out on it. Hopefully, we get it approved. Came in from a seller who's got other notes available. We're waiting on them to send us the full tapes. This is one note that they actually have available. So I thought I would go through what I went through this weekend that our students really loved, talk about the structure of the deal and how we're going to make an above average return on this deal. Okay. A way above average return on the deal for a couple of reasons. Okay. And there's some pros and cons to it. But I've got the numbers broken down, and this is kind of how we approach looking at deals. Now, this is a performing note case study. It's actually in Toledo, Ohio. It's an occupied, it is an owner finance note. And so I like the deal. I really like the deal for a couple of reasons. There are a couple of flags that we had to double check and due diligence, but for the most part, this comes from one of our reputable sources. All right. So it is a property, and here's kind of a photo. When we first saw the address, I got up, after I was like, well, okay, first of all, I saw the deal. I was like, whoa, there's some numbers on here look confusing, a lower value or a higher unpaid balance. And so when I got online, I looked at the address in the map search, and this is what it pulled up. This is a photo of the property from June of 2023. Now, if you're listening, you can't see the property. But it's kind of gray. It looks like a traditional Toledo, Ohio property. Looks like it could use some TLC. Now, Zillow gave it this value of about $56,000, but it looks like it needs a new roof. It's just a house. It's a $50,000-$60,000 house in Toledo. It's right next to a big white building, a nice house. It's in a decent neighborhood. I like the neighborhood, Toledo. I've bought plenty of stuff in Toledo, driven through there multiple times. It's on a normal sized lot. But then I looked at a little bit more information on the Google search. And then the next photo I found was actually that the property had been fully rehabbed. And this is a current photo from the listing from just a few months ago when the actual property was sold in owner financing. Okay, well, obviously it looks a whole lot nicer now. Okay, much nicer now. Now I can understand a higher value on this. And what's great is the listing had basically 24 other photos of the interior, restained wooden floors, interior paint, very nicely done in a rehab project. And the seller had this note, obviously went in. They were first going to keep it as a rental and advertise as a rental, and then ended up selling it as an owner finance note to somebody who's taking over the property, who wants the property and putting a renter in there, which is okay. Nothing wrong with that as well. So here are kind of the numbers behind what we found. Okay, first and right off, the performing first lien, the current unpaid balance is 106,054. There was a $110,000 sales price. I think 109,900 is to be precise. Okay, after doing a little digging, but 110. Okay, it was originated March 28th of 2025 is when the note was originated. Now Zillow shows it saying June as a property sold, but we know that's a bit of a delay in recording and things like that. But anyway, sold on a mortgage, March 28, 2025. Not a contract for deed, okay? An actual mortgage. Now, contract for deed, you could evict relatively quickly, but since the balance is over 100, I think having it on a mortgage is actually a little bit more advantageous, especially with it being an investment property, stuff like that. 30-year mortgage at 8.9% interest rate. Since it's got a $106,000 balance, the P&I payment portion is $845.71. It was done through a third-party RMO who passed everything. It's been approved for rental property in Toledo, Ohio, gone through all that stuff. Really looks nice on the before, when compared with the before photo versus the after picture, okay? And it's currently serviced with Allied Servicing. Okay, great. And here's the kicker. The seller is looking to sell the note at $44,700, okay? So I think they need to move this one relatively quickly, because like I said, the original value is about 56. They bought it cheap, did some nice TLC to it, probably bought it a lot cheaper than 56. And they're looking to move it and turn it into a good note for somebody to step in and buy. And I like these. I like this because you're buying it at a pretty significant discount since it's a 30-year mortgage. Okay. And the seller, when the owner finance, did do a seller's title policy too, which is an added bonus. So some of the things we talked about before, like RMLO, a little bit of down payment, third-party servicing, and then even the lender's title policy is great. It makes that a very marketable note. Now it's got 4 months of seasoning on it as far as payments, which is not bad. Would I've liked to see a bigger down payment? Yeah, but I think there's still some upside based on the fact that we could buy this still at a price that makes sense. So let's look at some of these things. So basically, if you tell you previous value, like I said, is 56, that's the big red flag. And that would, showing a value of 56 is going to, to justify 110, I really need my BPO that I've been ordered to come in at that higher price. Okay, now if it comes in at 80, 90, I'm still pretty much fine with that. That's more than 56, so it still puts me in a good percentage. Okay, like I said, fully rehabbed out, really nice job inside. They're doing a good job to market the property. I'm pretty happy with that. So I get to see interior condition without having to do a lot of work. They're selling basically at 80%, not of FM, 80% of what they said the old value of 56, 44,700 divided by 56 is 80% of that. Or they're basically selling it at 42% of the UPB, with the UPB being that 106. Okay, so you could also argue they're selling it about 40%, of actual value if the value does come back at 110 versus the 56. So like I said, I would verify that in BPO due diligence. If my bid's accepted, we'll go from there. Now, the monthly P&I payment just gives you a bit of an idea on the cash flow. 845.71 times 12 comes to $10,148.52 in cash flow. Now, that's just P&I payment. Now, if it's a performing note with Allied, you're going to pay $30 a month, so you take off another $360 on there. It's still going to be about a 22% cash and cash return after servicing, if we just paid the $44.7 that they want, right? Now, the seller did say they were a little bit flexible when I reached out to them. So I like that. So what should you do? Well, this sounds great, Scott. 23% ROI sounds great, but how do you make an infinite return? How are you going to promise what you delivered? Is this a bait and switch? No, it's not a bait and switch, ladies and gentlemen. I'm going to show you how we do this and how we would structure this by going through some of the numbers, especially when you start talking about using other people's money. Now, look, who's going to cry about a 20% return using their own money? That's not a bad day, especially if you're using your IRA, okay? Pretty phenomenal. But what I did on the workshop on Saturday, I went back through the numbers, put them in a spreadsheet, and started sharing with you the way to make infinite returns is to bring in a private money lender and you have zero money into the whole deal. Okay. And this actual deal works for that pretty relatively well. Okay. So let me share my screen. Let me pull up my spreadsheet here for you guys. All right. Let's see if this works. Okay. I'm trying a new thing here with Zoom so that you guys can see me present. Okay. I think we're working here. I think we're working with Crisco now. Okay. Come on, share. All right, I think we're okay. All right. So the thing of this deal is I've got all these numbers spread out here for you. So I've got over here, if we bought it at $45,000, just to round it up a little bit, okay? $110,000 sales price. Sold the property for, sold it on terms that way, okay? Let's see here. I'm just trying. Oh, come on. Zoom has been acting funky. All right. 110,000 sales price. They look like they put about $3,000 down payment. 106,054 is the UPB. All right. 8.9% interest rate. We ran that through an amortization table and it came up exactly 845.71. That's a P&I payment. I don't know taxes and insurance, but that should be covered by the actual owner of the property. 360 term, originally 328. The original BPO before it was sold is 56,000. Obviously, Zill's already updated it just in the last 2 days, which is kind of nice. So if you look up here, you'll see where I said, okay, costs, dollar costs, money costs, that's a dollar sign. So money costs at 8%, money costs at 9%, money costs at 10%, 11, and 12. So I ran that across the top here. So if you're borrowing money, say we just buy it at 45, Okay, that's the purchase price. Maybe go to 50, stuff like that. But we'll talk with like 45,000, the right nice round number. Okay. If you borrowed the money from somebody at 8% interest only, you'd be paying $3,600 a year to somebody. That's $300 a month on average. Up to 12%, which would be $5,400 and $450 a month paid to your money partner. Okay. Now, I have a line here which says month cash flow. That's what you would net after paying your money cost. So 3,600 divided by 12 equals 300. If you're bringing in 845.71, that's a positive monthly cash flow to you. 545.71, $545 in cash flow coming in that you have none of your own money in the deal. That's an infinite rate return. That's an annual cash flow of 65.48. Over 5 years, that comes to cash flow 5 years to you of $32,742.60. Now that's on the 8%. Let's throw it over to 12% down at the end. 12%, $5,400 paid out annually to your money partners. That divided by 12 is $450 per month. That leaves you a net of $395.71 per net, so just under $400. That's an annual cash flow of $4,748. That leaves you with a 5-year cash flow of $23,742.60 that you made without any of your own money. That's how you make an infinite return on money, by doing that deal. Okay. Now, let's say and I've already raised capital for this. I went through marketing on this thing Saturday night. We sent a text blast out. We had somebody respond, say, hey, I'm interested in getting $400 on, $400 a month on 50 grand. Well, that comes to roughly about a 9.5% to 10% interest rate that I'd be paying. I'm fine with that. I'm all day fine with that. So if we hold this note for 5 years, remember the interest rate's at 8.9% right now. Do I think rates are going to go down in 5 years? Yeah, probably so. Our value is going to go up on property. Yeah, probably so. So the borrower who bought this property on an owner finance note should have some equity at that point. Probably wants to get out of 8.9% interest rate. If they don't, that's fine. We'll hold it. Or if they sold it after 5 years to cash out and go that route. But saying a 5-year balance, when you run your amortization table, if they just keep making the normal monthly payment, your payoff at 5 years, after 5 years, is 101,604. Okay? 101,604, it'd be the payoff. Okay? Well, if you look at what you're into it for at 45, is that number right? I'm making sure this is correct. Yeah, means if you subtract your $45,000 investment from the 101,604 that they refinance, remember, you're getting cashed off, all right? You're getting paid off. That would leave you with a profit margin, yes, profit to you, the note holder, at 56,604 after you pay off your money investor at 45. That's a net. That's a pretty good net. So you made cash flow of 32,000 plus the 56,000 for holding it for 5 years. That's an 88,000, actually 89,000 when you add the two together. $32,742 that's the cash flow over 5 years at 8%. That's paying your investor an 8% money. So you take the 32,742 plus the 56,604. That comes to $89,346. Now, if you're paying 12% for the 5 years, you're still going to net $23,742.60 just from the cash flow side, and then add in that 56,604 difference between what the UPB is and what you borrowed. That's still going to be a nice 70. That's actually still going to be an $80,000 profit. That's a pretty good day, right? Now, well, Scott, what happens if they stop paying? And that's the one big concern I have, right? So usually what we do, if we were afraid of somebody going to foreclose, we would throw in a 1-year prepayment penalty. Let's say they stop paying immediately and we got to go through the foreclosure process. So, all right, so we bought it at 45. We're going to add in $3,600 in 1-year prepayment penalty. So I always tell my investors, look, if it sells off within a year, I'm going to give you a year of interest so that your money at least made some money. Okay. So if you got an 8% and it takes me 6 months for you to get your money back, guess what? You just made a 8% times 2 is 16% cash and cash return. Okay. But if they don't, okay. So if they stop paying now, then we got to go through the foreclosure process. It's going to take less than a year roughly to do it, but we'll say so. Paying our investor 1 year prepayment penalty on 45,000 is $36,000. Okay. We add in, oh, wait a second. Maybe actually that'd be yeah, no, that's right. That's correct. That's correct. On the low end. Figure $3,500 to foreclose in Ohio, which is about what we've paid. That means our total cost into the deal is $52,100. Okay. Now, we're expecting our comps to come back on a BPO at 110. If our comps come back at 56, I'd be a little bit worried. We would need to get a little bit better price on the deal because you're basically going to break even at that point. You're not going to get a lot of money, but based on the condition of the value, condition and all the upgrades they did to the property, I think it's worth a whole lot more than 56, but I don't know. Okay. But let's just say it's worth 110. Well, if you turn around and sell the property for 110, all right, you take away 10% for closing costs and commissions. All right. That's going to be that leaves you at 11,000 taken off. That means your basically net is 99,000. 99,000 minus 52,100, which is your total cost basis. That still leaves you with a net profit of $46,900. On the high end, look, yeah, a little bit less, but that's still a pretty good deal, taking care of your investor and taking care of you. You don't usually see such a big difference between the UPB and then what they're willing to sell, but hey, this is one of those deals that you don't wait around for to jump on. And that's why you start marketing something like this for, because if somebody's got $50,000 sitting in a deal, same thing. It might make sense for you to, okay, I'm going to borrow $55,000. And all our numbers change a little bit on that. So it's still, if you carry cash flow, you're paying a little bit more. You're still getting $480 to $300 a month. Okay. Between 8% and 12%. And you're still making anywhere from $5,700 to $3,500 a year over 5 years, anywhere from $28,700 down to $17,742. But you're still getting a nice $46,000 payout at 5 years if you borrow 55. Now, if you borrow 50, I probably wouldn't go above 50. I'd probably just stick to 50 as a nice round number. Yep, still good deal. 512 to 345 a month in cash flow as our numbers automatically change. Like I said, biggest concern is what's our BPO going to tell us his value is. Hopefully it comes back at 110 because there are comps in the area for 110. The $56,000 value was as it was previously, that gray building that's not very sexy. Now the question is, and I'd love to hear from you guys, would you do this deal? Would you fund 50 to make 8 to 12%? Yeah. 10% I think is a fair deal on this, especially if it's going to be passive and that money's been sitting there. If you're interested in deals like this, please reach out to me. We're going to break down another deal that we were looking at as well down in South Texas, just property just south of San Antonio. That's a pretty good deal as well. And a way to arbitrage. This is one way, guys, you can arbitrage using somebody else's money and put money in your pocket at an infinite rate of return. All right. Anytime you use other people's money and you don't have any of your own money in the pocket, out of pocket, there you go. That's how you make it infinite. Don't get me wrong. You're going to use your own money and make 20% or greater. That's still a phenomenal day in the note space. All right. And worst case, if they don't pay, you take the property back. You got a property that is going to rent for $1,000 plus a month based on market rent comps and go from there. So a deal I'm pretty excited about. Hopefully we'll have more of these that we can make available to you guys out there to either fund or purchase in the next week or two. So hope you enjoyed this deal. I know I will. We have waiting on our offer, but offer got out Saturday night and following up with them today as well. Just making sure that, hey, our foot's in the door to buy this deal and get this deal funded. And like I said, what I did as far as funding, like create an image, I posted on socials. We did a little short TikTok video about the deal. And then we also shared it to a text message blast of folks that it clicked, just 100 and some odd people text message blast. And we had a couple respond that, hey, yeah, interested in definitely, hey, 50K, if I can get 9, 10% for 3 years on their money, they're pretty good to go. So just responding back and forth and work and see who can fund faster and just wait and make sure, hey, we get a contract signed on this thing so that we can start the due diligence process. Like I said, big caveat, I feel pretty good about the paper. Big caveat is just the difference in the values. And the seller is probably a little flexible. If the values don't come back where they need to be, probably drop it down. Maybe I pick it up for 40. Maybe I get 42. Every little bit I save, $2-3 grand is still That's almost 2/3 of the foreclosure costs if I need to. So that's a great day, great deals. Follow me for more information. Guys, check us out at weekclosenotes.com. This is like just one of the things, drop in the bucket, that we teach during our 3-day workshop. And definitely, if you're interested in finding deals like this might be something to think about as far as sign up for our one-on-one coaching, because these are deals that we're going to find for you if you're a one-on-one coaching student. So great way for you to make your money back on the coaching costs and put some nice ROI into your IRA or your HIP, your HIP National Bank. So go out, take some action. We'll talk to you soon, everybody. Thanks. Hey, real estate investors. So you want to dive into the world of note investing, but don't currently have the funds to sign up for an expensive class or a workshop or one-on-one coaching. Well, then you definitely want to check out the biggest bang for your buck in the note world, and that's our WCN membership. It get you an all-you-can-learn access to our class workshop replays, tapes, weekly coaching calls. For $97 a month, it's the biggest bang in the note industry because you get access weekly with me. You can book one-on-one phone calls with me. As we get different tapes in, we'll share them with our members after our one-on-one coaching students get access to us. We share a variety of tools, like I said, replays to the previous workshop, special discount codes to other events that you can take advantage of to help you get more bang out of your dollar every month. We've been investing in notes for over 20 years, and one of my biggest passions is helping note investors, big and small, get started buying notes. Yes, I got started years ago with no money, no savings, and no list. And I love helping people close on their first deal, get their first private funding partner to help them fund more deals and help them both make above average returns. If you're looking for somebody to help you take your note investing from 0 to 60 and want to get started, my WCN membership is a great place to get started. Like I said, we upload lists to it, video training, coaching calls for $97 a month. What can go wrong? The only thing we ask is you hang around for 6 months, and then if you don't like it, you can cancel. But check it out at noteumbrella.com. That's noteumbrella.com. That's our WCN membership. Get looking at assets today. Start putting your fingers on the trigger to pull the trigger on some note deals here before too long. Yes, anybody can buy notes. I don't care your age, your savings, what race, color, whatever it is. Note investing is all about what action you take, and the first action you should take is signing up for our monthly membership at $97 a month. That's noteumbrella.com. You can also access it by going to weekclosenotes.com and checking on the monthly membership. But we are here to help you. Scott Carson, the Note Guy. We look forward to seeing you at the top.